A number of factors combined yesterday to cause a 95.85 point decline in the S&P 500 and a surge in the VIX above 20. I will be discussing in this video the two that I view as the most important. Target and to a lesser extent TJ Maxx reported a slowdown in consumer discretionary spending. Investors need to be laser focused on hard data to determine whether or not significant declines in consumer sentiment and consumer confidence reported in the University of Michigan and Conference Board surveys over the past 4 months is turning into actual slowdowns in consumer discretionary spending. The second negative, which is more important in my opinion, at least at the moment, was the tepid demand in the 20-year Treasury auction yesterday, May 21st, 2025. The yield was 5.047%. After this auction, the yields on the 20-year Treasury debt rose to 5.13%, the highest since November 2023, and the 30-year bond yield rose 11.5 basis points to 5.08%. It is a matter of opinion as to what caused the tepid demand for the 20-year Treasury bond and the increase in yields for the long Treasury debt. I don't think it was the one-notch downgrade in the U.S. debt rating by Moody's, but was part of a growing realization among informed investors, which excludes, of course, members of a certain cult, that the Republican package passed last night would significantly aggravate the growing U.S. fiscal problem. The nonpartisan Congressional Budget Office estimated that the Republican package would increase the federal deficits by $3.8 trillion over the next 10 years. In addition to the tax cuts that do not pay for themselves, of course, the Republican plan would add $350 billion in new spending, primarily in defense, deportation costs, which are very high, and homeland security. The CBO estimates are in a letter dated May 20, 2025, and it can be read by anybody on the internet. The CBO estimates that the Republican plan would result in 8.6 million Americans, fewer Americans having health insurance, and 3 million Americans would lose their food stamp benefits, or as Politico summed it up, rich people benefit and poor people lose. The CBO analysis is included as a link in the Politico article that I reference in the more section below. There was also a massive rollback in green energy tax breaks. The Penn Wharton budget model estimates that the GOP plan would increase federal government deficits by 4.6 trillion over the next 10 years. I will cite a link to that estimate in the more section below. This is not good news for investors in Treasury debt. The increase in U.S. debt interest cost resulting from the Republican plan will, of course, more than offset the mass firings of federal employees favored by the Republicans and cuts to federal programs that they do not like. If the average weighted interest rate on the current U.S. Debt increased by 1%, the annual increase in interest costs would be about $360 billion. With the VIX now above 20, as predicted in my VIX model after a trigger event which has occurred, and that creates an unstable VIX pattern and a predicted brief return to VIX movement below 20 thereafter, I am now prevented by one of my trading rules from selling stocks. I will have several pairs that have already been made, which I will discuss in tomorrow's post. That included links to the Politico article and another article that was published in February from the Committee for a Responsible Budget that the interest cost on the federal government debt will surpass $1 trillion next year. I would add that the total debt of the United States was less than $1 trillion in 1980.